What is up, you guys? It's Lincoln here. I just wanted to make a quick video. This is going to be pretty similar to my previous video, but a little bit more in general. I hear a lot of people talking about, oh, the market has gone up a ton. I'm waiting for a pullback, and then I'll jump in. This sounds good on the surface, but when you think about what the implications are of that statement, you really see that it doesn't make a lot of sense. I am a believer in the efficient market hypothesis, which says that all available information is priced in and the market is more or less very efficient. I do think there are some slight inefficiencies that can be exploited in the short term. I think momentum has a lot to do with that. And as long as human beings with emotions are still the ones investing, then I do not believe that they will be perfectly sound. But in the long term, I definitely do believe in the efficient market hypothesis, and I do believe also in the long term that stocks are on an upward trajectory. It's definitely not going to be a straight line, but in general, they are going to go up. So, I mean, back even in 2016, so this is kind of what I want to talk about today. So in 2016, we just had a huge run up after the 2008-2009 financial crisis. The stock market took a big rally after that for 7 or 8 years, and people here, when SPY was at 205, were saying, hey, it looks like we're at a market top. I think I'm going to wait to pull back for a pullback to get in. And so they sat on the sidelines, and sitting on the sidelines is a big mistake. And you can see, obviously, in the past 5 years, since 2016, the market has gone up another 70% from there. So I'm not saying this is going to happen every time, but if someone was waiting and sitting on the sidelines waiting for a pullback in 2016, they are still waiting, and they missed out on this huge run up. Not to say that the market still can't pull back further down below those 2016 levels. I just think that way more money is not made than is made when you're trying to time the market. Here is a graphic from Franklin Templeton. I've kind of touched on this before, so you can see 20 years ending in 2019. If you miss the best 20 trading days, your returns are basically zero. You miss the top 30 trading days, your returns are about -2%. You miss the 40 best days, you're headed towards -4%. So it is very important to be capturing those best 20 days, and these are 20 days over the course of 20 years. So if you think that you can time the market, you better make sure that you are still hitting and being in the market on these days. And another stat, I don't have it with me right now, but it is in Money Master the Game by Tony Robbins. I forget who he did the research through, but these best trading days are within 2 weeks of the worst trading days almost every single year. So if you're missing those really terrible days because you're great at timing the market, which nobody is, I don't even want to get into that, then you're also better be darn good at making sure you're in for these huge up days, which are usually right after the big down days. So that said, if you are nervous about buying SPY at $350 a share or whatever, I've mentioned this before, I'm a big believer in index funds, so that's why I'm talking about SPY. But say you are a little bit wary about buying at $357, I'm going to talk about a way to pick a price target that you would be comfortable with. And if it gets down to that level, then yeah, great, you're buying. If it doesn't, then at least you collected a little bit of premium in the meantime. And if you guys know me at all, I'm talking about selling puts. So say you don't want to buy SPY at 350, but if it fell to 300, you'd be buying 100 shares or more. And say you're willing to do that all the way out in January. So we'll go down and look at the 325 put, and you can see somebody is willing to pay you $488 for you to be obligated to buy 100 shares at $325 per share. So you are putting up $32,500 in collateral. I realize not everybody has this kind of money, but if you do and you are nervous about buying at $350, here's a great way to make almost $500 using that $32,500 in collateral. And if we want to take this a step further, say Lincoln, was still way too high at 325. You can do the same thing. You can go look at 300. Obviously, the premium is going to be a bit lower, but you're still taking in quite a large premium for that. And say you're willing to go even further out. Say you're going to go back to next January, a little over a year out, and say you're not going to buy it for anything less than $250. You can see that somebody's willing to pay almost $850 for you to be putting up that $25,000 in collateral to potentially be buying at SPY if it falls below $250 in a little over a year by January 21, 2022. So if SPY stays above the strike, then you will not be obligated to buy, and you'll keep the full premium. If it falls below, no matter where it goes, if it goes to $100 a share, then you're still going to be obligated to buy it at $250 per share. So this is a strategy. It's definitely not no risk, but there is you're basically taking on as much risk as you're comfortable with, since you are picking the strike price. It's a great way, especially when interest rates are this low. If you do have extra cash on the sidelines and you are nervous about putting the money in the market, you can still be making money while quote unquote sitting on the sidelines and waiting for a huge pullback. So let's just take this one for example. I'm going to pull up my calculator real quick and we will run numbers. So we're using $25,000. We're going to use this $250 strike for a frame of reference. So 848 divided by 25,000, so $848 divided by $25,000 in collateral. This is going to give you your return. So it is about 3.4%, and this is for just over a year. So when interest rates right now are basically at zero, this return looks very nice and very tempting. And if you were committed to buying 100 shares at SPY, if it fell all the way to 250, then you might as well get paid for that in the meantime. So that is the video for today. If you guys have any questions, let me know. We'll be posting on Friday our Robinhood 1K challenge update video. The week has gone pretty well, and I just got into a new position on VIXI, so you guys are going to want to see that. Like the video if you got any benefit from it, any good information. It helps out the channel a lot, and subscribe if you want to see more like it.